All right, guys. Well, there's a little bit of, I can't really think of a better word to put on this, but manipulation out there in the markets, you could say. So I want to just speak to myself as I always am in these videos. I thank you for the audience. Of course, this is giving me my outlet. You guys know why I'm doing this, but I'm speaking to myself, so I'm going to say things that I need to hear in today's video, okay? One of them is just that reminder that this game was not built for us, okay? We are guests. We are visitors in this game, all right? Why do I say that? Well, $1.5 billion buy in the futures market 15-ish minutes before that tweet yesterday from Trump. Truth post, whatever you want to call it. I'm going to say tweet. I mean, come on. Come on. That's wild. That's wild, okay? And, you know, I did spend the morning bitching about it. I'm not going to lie. I saw my wife's eyes roll back. And I just want to address it here, guys. You know, like these kind of things are frustrating, of course. I had a position on that I took a loss on. It was my vehicle for shorting the market as things have been looking the way they have been, as I've been talking about for months here on this channel. I entered ARK and it was looking like it was going to gap down. I was starting to get a bit of time decay and looked like I was going to, punch out of it for, I don't know, 20, 30, 40% is what I was thinking. And then that tweet came up and I ended up punching out of the thing. I just don't have enough time to allow this thing to push up and possibly come back down again, right? So I had to punch out of that thing for about 18% is what I took on it. And, it's frustrating. And it's partly what, I don't believe that tweet. I just don't. I also don't know, okay? And that's something that's different, I know, about me than what I see a lot out there, people saying and being so absolute. We don't know what's happening, guys, okay? We don't know if Trump is really talking to Iran, if he is or is not. I don't believe it per se. It just doesn't really check out in my mind. And I did see that the person he's speaking to is a man that actually supports our actions, right? It's not the people launching the missiles, okay, the IRGC. That's not who apparently we're negotiating or having talks with. But again, also that, who's to say any of this is true, guys? We just simply don't know. So all I can do is watch price and allow things like oil and simply the indexes to tell the real story, all right? And I encourage you to do the same. So if we look at SPY yesterday, what did we do? On that tweet, we gapped up and pushed right into the 200 and closed down on the lower third. So as I've been saying, and as I said yesterday, any pops, guys, is a lower high threat. I did put a new circle here in on SPY, but, frankly, all the way up into about 674, even if we keep pushing up, if we put a lower high in and push back down through the 200, that's a short, all right? And I will look to reinitiate. So I'm not going to overreact just yet. Oil is right there at about its line in the sand that, the bulls definitely want to see this thing stay below that balance, which, okay, some pretty perfect technical price action right here. It broke below, coming back up to retest it and rolling. That's a short, okay? Short with the stop right above. I just want to say, again, this is not the time to be calling bottom. I just don't believe that to be the case yet. And it's not a belief system, okay? It's data. It's straight up data. And I've been showing you guys this every video for the last 5 or 6 videos of what things look like coming out of corrective markets, okay? It's a clear changing character. We take out a swing high, a lower high, make a new swing high, come back, make a higher low, and then push back up through the area is step one. And if we can continue to do that, keep making higher highs and higher lows, we've now initiated a new rally. And that looks like this, okay? It looks like this. It looks like this. It looks like this. I mean, I know I'm just showing circles, but seriously, guys, this is what it looks like. You have a corrective market, okay, that goes and it makes a new swing high and starts to make higher lows, and it begins a new rally. This is the move that we can be a part of, and we don't have to catch the first leg of it. If it's going to be a rally, there will be multiple entry points. So I'm not going to say that 15 times today, but just know that that is what I'm waiting for to initiate long exposure, okay? So, now I've taken a few small losses here as I'm trying to navigate this down move in the markets, and, now I'm only up at about 11 or 12%. On the year. So I'm in drawdown, okay, but I've stabilized and I'm sizing properly, but I'm remaining cautious. I'm going to remain, frankly, I'm bearish on the market. We're in a downtrend, okay? Like, we are in a downtrend, period. We're losing major levels. All of the ETFs look like shit, okay? Yeah, some of them caught a bid yesterday. Some of them look better than others, but, right now we are still in a solidified downtrend that I'm not going to ignore, right? So even the Qs yesterday tried to push up above the 200, failed, closed below. We got RSP, closed at the bottom end of its range for the day. IWM, guys, this ain't it. This ain't it, okay? So I'm not going to force things to the upside. Now, today, I do want to talk about some things that I'm looking at where I just said, like, I'm going to remain cautious. Low position count with small size. So typically, I break my portfolio into 10 positions in my swing account. And, I never go over 5 to 6 units in a risk environment A. So in this move in the SPY last year where I made, I tripled my account in 5 months right here. I was doing 5-6 positions on at a time up through this move, okay? And hitting it over 90%, you can really do some positive growth to your portfolio in these times. But that's risk environment A, and I do 5-6 units, but I use options, so it's levered. So I don't need to expose more than 5 or 6 units, 50-60% of my portfolio to see growth. It's significant, substantial growth, okay? And I can sleep at night because, we have a president that will just tweet anything and move markets. So to touch on that one more time is like, you need to factor that in. You must factor that in. I don't care how much you hate it, how manipulative it feels, whatever. It doesn't matter, okay? You are in charge. You are the risk to your portfolio, okay? You must factor in the world where he doesn't want to see the market go down, guys, and he's doing things to prevent it. It's that simple. I don't care how you feel about anybody, okay? But just realize that we are in a world where he's going to do things to prevent the market from going down. We're in a freaking midterms election year. Like, guys, you need to factor this into your position size and count, okay? And also when the market will be in an uptrend again. The US stock market, like, unless the world literally implodes, we're going to be in an uptrend, in a clean follow-through environment again. So, like, just wait for and allow that to happen. The change of character confirmation, then we can start, okay? And as long as that environment continues, then it's free money, guys. Swing lows don't get breached. Look at this. Look at this. Triple R, 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 triple R. All of them worked. Okay, I mean, I can do this over and over and over again in uptrends and rallies. Okay, all of these triple R's worked, it's free money. All of these triple R's worked, it's free money. All of these triple R's worked, it's free money. Yes, you lose one or two when we go into a consolidation or a corrective period, right? So, like, that's when you begin to notice, as I did in October, hey, things have shifted here. October 10th, that was a change in character. November 20th, that was a change in character. Let's dial it back. We're not really rallying and following through. It's just a few days up, pullback. It's flattening out. We're consolidating, and then we began to lose the daily, weekly, and monthly. All right, so like that's how cycles change. And there's a thing I want to bring up. It's so true. This is a quote that I just saw from Drunken Miller right here. The crowd makes 80% of the money 80% of the time and then kill themselves in the turn. What does he mean by that? Anyone can make money in a follow-through environment that doesn't break swing lows, right? It's easy. Okay, you wait for the pullback, you triple R, just triple R. If you don't know what that means, come ask me. Okay, but it's trend continuation, waiting for pullbacks and confirmation. It holds swing low and reinitiates retracement, reaction, remount. Remount is the trigger. Anyone can make money in that market, but it's these sort of times where people get chopped up. It's these bear markets, it's these corrective periods where people force things. They force day trades into a swing strategy. They force investment decisions into a swing strategy, or whatever it may be. You overtrade, you oversize, you get chopped up, and you fuck your year up, okay? I don't allow that anymore. Yes, I'm in drawdown. I was up almost 30% on the year. I think I was above 30% early in the year, and I'm all the way down to about 11 or 12, right? That's frustrating, but I use options. Like, my portfolio, my sizing, my risk tolerance has this built in, okay? But I'm not blowing it, okay? I'm not blowing the work I did last year, and I'm up on the year, okay? It's just, you cannot allow the turns, as he says, to take you out, to kill you, all right? That is so important, and I'm seeing it all over the place. People are blowing up all over the place right now, and you've got to scale it back. And I'm getting some feedback. Some people are saying that the analysis is helping them. It's keeping them grounded. They're in cash. They're waiting for the change of character, the confirmation. Great, fantastic work. I'm also seeing some people saying that this is difficult and other ways of saying it. Of course it is, guys. This is a messy snip snap market, guys. Of course this is difficult. So you must realize it and control yourself, and don't try to change your life in a choppy downtrend. All right, so I'm going to show you what I'm doing right now is I'm looking around for strength because, again, I do believe we will break out of this and find ourselves in a new rally in the U.S. stock market, okay, with leaders in a trend backed by growing fundamentals, right, that I'm going to swing trade the next leg of the trend, right? So I'm looking around like, where's their strength, relative strength, just strength, period. I said this like a month ago. It's not all about semiconductors anymore. It's connectivity, peripherals, memory, it's all the other stuff, but hardware, okay? Software is getting taken out back. There's an argument on that I don't want to get into, but it is what it is. It has been taken out back, but hardware is holding up, you guys. So I want to flip through some of these names with y'all, all right? Here you go. Now, I don't want you to take what I'm doing here and go trade against the market, okay? The market is in a downtrend. 3 out of 4 stocks follow the market. So if you're going to choose some of these as good as they look, right? A few of these look fantastic, specifically GLW and specifically AAOI. These look fantastic right now. So if you're going to force it against the market's in a downtrend. If you're trading upside of price action, you're trading against the market, okay? That is very, very difficult to do. Sustainably, successfully, all of the things. It's very difficult. It's much easier to have the full momentum behind your positioning, okay? That's why I'm favoring shorts right now. Anyways, hardware, all right? This stuff looks good. Some of these are semis, some of these are networking. It has to do with the AI trade, okay, which is holding up, you guys. It is. All right, so AAIO looks good to me. GLW looks good to me. We got POW here. This looks good to me. I mean, retracement, reaction, remount. Gosh, it looks beautiful. I wish I could take these things now. Before I continue and keep showing you more and more, I'm identifying these because when the market does start that new rally, these are the leaders that I will take triple R's on, okay? Some of them that I will be watching and looking for triple R's, among some other things. Obviously, I'll be looking for the mags to come back and financials. We'll get into it, guys, but just know, like, I am not trying to tell you to go buy these stocks today because they're triggering. I'm telling you to put these on watch, okay? And I'm trying to help you notice strength, all right? If they're leading now, they're very likely to be leading in a future rally that is likely to come. So you need to have these on your radar. AEIS, okay? CIN. Look at these things, guys. TTMI. All right. MTSI. Guys, fantastic looking stuff here, all right? AXTI, another one. Guys, like this stuff is running away. This stuff is strong, all right? And again, if you must trade some of them now, then just control your size. Realize that the win rate is going to be lower than in a follow-through uptrend in the market. You're trading against the market, guys. All right. Another thing that I'm noticing is uranium is, holding up. Some of these are looser than like what I just said. The hardware, that stuff is leading, okay, period. But some of these other things that I'm going to talk about here, they're just not falling off a cliff, okay? So uranium looks okay here, testing the 200. So taking a look at the U's here, one that I have traded before on the weekly, it's got a decent look. All right, retracement, reaction at around our level. What's our level? The prior breakout level, okay, that we had this little range balance for a few weeks here. Just pulled back to retest it, reacting off of it. Back over the 9, has a look to it. And then I want to talk about financials. All right, let's go to the daily here. And this was a part of leading us down in the market, right? Like this was obviously leading the markets down. It's the second heaviest weighted sector in the markets. But if you look at some of these things, JP Morgan, we aren't looking horrible on the weekly on these things, all right? JP Morgan, retracement, reaction at around our level. What's the level? Prior all-time high level, all right? Back up through the 9, has a look to it. You must control the size if you're going to trade against the market. But these things have a look. We got Morgan Stanley. Look at this guy on the weekly. We got Goldman Sachs. Look at this guy. These things, they don't look quite as bad as the sector, okay? On watch, but I need the market, okay? I need the market because one more time, guys, if this is going to be a new rally and this thing is going to get back up there up towards all-time highs, I'm okay with letting it happen, get above our moving averages, pull back, confirm, and taking this move, okay? I don't have to buy the weekly trigger right here. I can buy this one and then this one, okay? Like these, you don't have to get the first move. A few more things that I'm looking at. I would say bots, robotics, it's pulling back, obviously. Deep retracement here, but some of the names in the space on the weekly look somewhat attractive, all right? You can see I was playing with this guy earlier, a little range there. I have not taken that, obviously, and I'm actually not very likely to, but, if you want to be more aggressive than me, then if this thing can not break into a head and shoulders, right, and fail the neckline, if it doesn't do that, then maybe it's a retracement reaction and a remount of the weekly there. Sorry, I know that's super liney and probably difficult to see, but look, simply back over the 9 here on the weekly is a triple R weekly trigger. All right, on something that does have an ability to move pretty well. We've got Tesla as well, another one of my favorite robotics names. It should be one of yours as well. Retracement reaction at the 50, remount of the 9 is, it's on my radar. We've got 6954. This is something that I traded recently. This is a Japanese industrial robotics company just pulling back to retest. I hate that it does this. Pulling back to retest the box breakout zone, multi-year consolidation zone. Let's get the RSI off of there. All right, multi-year consolidation zone, broke out of it. I took a little 7%er there, left some money on the table, obviously, and I have to do shares with this, but the markets were starting to get a little shaky, and I just wanted the cash back. Anyways, it's pulling back to retest the area. A weekly trigger back over the 9 is attractive to me, and Amazon is my last and maybe my favorite robotics name. Back over the 50 is something worth watching, okay? The market can clean up and get some follow through, but again, it's not something we have to force, okay? Because if Amazon is going to go to new all-time highs because they are streamlining everything with robotics, it's going to do this. Okay, you see how many, it's going to trend. It's going to trend. You're going to get a trigger, right? Like you don't have to get the first one against the market. You can force yourself. I suggest you do force yourself to wait for the momentum of the market to be behind you and realize that rallies mean exactly that. It's a rally. It's a trend. They offer multiple entries. We don't need to get the first one. We don't have to guess. We can let it happen, let it confirm, and then enter the move. On every subsequent retracement, reaction, remount that holds structure, that holds trend, does not breach swing low. Typically, these things last a good while. Okay, here's a change of character that trended for a while. You had one that breached right here, but then you're right back in for a while. One that breached right here, you're right back in for a while. More often than not is the world we like to live in. So I'll leave it at that, guys. And, don't allow the market right now to frustrate you. Take responsibility. If it's frustrating you, you're losing money, right? Who gives a shit what Trump says? I mean, really, this is not politics. This is pocketbooks. Who cares what he says, doesn't say, or whatever? You're only upset if it costs you money. Okay, well, if it costs you too much money and you did damage, that's not his fault. That's your fault. You're oversizing in a very unpredictable environment. That's on you. All right, and you got to get your shit together and stop doing that. Do not try to change your life in this market. Okay, survive, and walk away if you need to. All right, I wish people told me that years ago in my career when I overtraded this kind of stuff and did damage that took forever to climb back up through. Okay, don't dig yourself too deep of a hole. All right, and fuck up your confidence, make you rethink models, all this stuff, guys. This is a tough market. If you need to take a walk, take a walk. Come back when the rally resumes. Okay, it will. The U.S. markets are typically trending up. SPX, monthly chart, zoom out. All right, guys, stay safe, manage your risks. Let's go make some money. All right, keep it tight, understand the environment. A lot for the headline risk. We have a war and we got Trump as president, okay? Headline risk. It happens. A lot for it, all right? Size properly. Wait until we get into a clean uptrend again to get overly aggressive. That's it. That's all I got for you guys. I'll see you soon.